I'm Peter Resnick from ShadowTrader.net, and this is the Weekend Edition. Some wild action in the market since our last show, so we definitely have a lot to talk about. Big swings due to the unwinding of the yen carry trade had left the major averages in a very interesting position. We're going to talk about that and a whole lot more in this particular episode, so without further ado, let's get into it. This show is ultimately about looking forward, but I want to take you back for a moment to the recent past and tell you a story of something that I think will resonate with a lot of traders who may have been in a similar situation. Welcome to A Trader's Tale. Once upon a time, there was a trader. His name is not important, but he vaguely looked like this guy. He was a good trader, not the greatest, but quite consistent, and he had a method. He had an edge that he exploited over and over, and he was able to teach that method also to thousands of traders through an advisory. He also ran a weekly internet show about the market, which he did with a huge touchscreen TV that he was very proud of. Because he had so much going on, he rarely took any time off, and that left him quite stressed most of the time. But he did have a small window of vacation planned for early August. You see, a very close friend of his was having a large milestone birthday, and he convened a number of old friends to get together to celebrate this event. But that meant that he was not able to shoot his video that weekend, which is usually recorded on Fridays, and instead he recorded a shortened version on Wednesday of that week, knowing that he would be away from his desk on Thursday, August 1st and Friday, August 2nd. Now on that particular Wednesday, which was an FOMC day and the end of the month, the market gave a strong signal by closing above a very important consolidation area and just holding there. And thus he created a video saying that it was bullish because it was end of the month and it was the Fed, and the market held up quite well. Now, even though he thought the next move was going to be up, he actually was relatively flat coming into that particular Thursday and Friday because he knew that he was going to be away from his desk the next couple of days. So he did the video and packed up his things and took off for the trip. Now, the trader didn't quite know it yet at the time, but that Thursday, August 1st would prove to be a very auspicious day. You see, the market opened up higher as he expected that it would go higher, but then started selling off quickly right from the beginning. Now, if you've ever traded on an airplane, you know that it's not easy. There's a lot of factors to consider, not the least of which is the really horrible internet connection on the plane, which often goes in and out. In addition to the bad internet, there was also the factor of being extremely cramped in the seat. You see, this trader was somewhat tall, about 6'1", and it was almost impossible for him to hold the laptop on the tray table. So he had to do that crazy thing that people do on the plane where they have the screen down on their lap and the keyboard up here, up against their belly. So he's on the plane, very cramped, laptop on his lap. And he knows the market starts coming off. Things are acting weird. There's something very wrong with his thesis about originally thinking that it was bullish. And now he's thinking that the market has a good chance of going very hard in the other direction. But he does not want to send out any official trades to his subscribers because he knows that he probably won't be able to manage them the next day on Friday. So instead, he does the best he can and he puts out this particular alert. And he says, this is now a look above and fail, which is rotating to the opposite end of balance. At that balance area low, there is a strong potential for the market to move lower. There will be a lot of overhead supply now. Any breakout from balance can target a move that is the height of the balance. And if so, that means we could be like an 850-point down move in the NDX and about 110 in the S&P. I would not be long anything here currently. And so the trader starts to short the market, starting with the NQs, just 5 contracts. The internet keeps going in and out, back and forth, lots of turbulence as well, and also that cramped space in the seat with the laptop upside down. Puts on the 5 contracts, the market starts to come off. So far, so good. He's up about $11,000 shortly thereafter, and the internet goes out. But this time it stays out for about a good 7 to 8 minutes. When it finally comes back online, he looks at his position. The NQs have come down another 60 handles. He's thinking, great, and yet his position is still up, the same 11,000. How could this be? Is it a glitch with the platform? Is it more internet issues? Neither. He realizes that in holding the laptop upside down and having the keyboard up against his belly, he mistakenly had his hand on the trackpad and he touched it, and that caused the limit order to go into the DOM and close the NQ position. So now he has to start reshorting it. He starts hitting the NQ again in bigger size, but the internet keeps going in and out. So he'll put on a little bit of the position, lose connectivity. He starts hitting the ES as well, in addition to puts on the IWM and some calls on the UVXY. He also wants to short a little bit of QQQ just to mix it up a bit with some shares. He manages to get 2,000 shares short of the QQQ, and interestingly enough, it then goes hard to borrow soon after. Now his plan is to get more short, and he wants to, but again, because of all the issues, it's difficult. And the reason he wants to be more short is that he knows that if the market moves down to the open or the low of the prior day's bar here in the futures, it's going to trigger an avalanche of selling at that point more than likely because of the consolidation and the move down to the low end of the consolidation. So what he tries to do after that is put in sell stops that will trigger once the ES and the NQ come down to the low end of that prior bar. Again, the connectivity issues are rampant. Also, the cramped environment and the turbulence is kicking in, but he does manage to get the sell stops in after many, many attempts. He would put some orders in, internet would go out, get a message back from the platform saying low connectivity or whatever, no bandwidth, and the order didn't go through. Eventually, he perseveres and he gets all of the short triggers on that will get more short at the low end of that prior day's bar. He exits the plane, meets all his friends, and goes out to a fancy dinner and then goes back to the Airbnb. As he goes to sleep that evening, he tells himself that he is not going to look at the positions. He's going to take the risk of potentially being whipsawed overnight, but does not want to be scared out of the positions. And he knows that he has about a $20,000 to $25,000 cushion of profit once the day ended. So he's willing to roll the dice on a whipsaw. The next morning is Friday, August 1st. The trader wakes up at the Airbnb. All of the friends are there. Everybody's up relatively early, wants to go to breakfast, wants to start the weekend officially. The trader is stuck staring at his screens. On the move down, the position is now up $300,000 in addition to the gains that were made the prior day. And now the trader has to make a very, very important decision, one that has huge ramifications. Remember, the trader never takes any time off. It's extremely rare for him to even have this one moment being away from the market and hanging out with his friends. Everybody wants to go to breakfast and start the day, and they're all asking questions like, come on, are you coming? Are you coming? Are you coming or not? So again, the trader has to make a decision. The trader closes all the positions, books the profit on that particular day, and goes on. Thinking about it a lot, the ramifications of it, knowing that it probably could be bigger, but again, never takes any time off, didn't want to spend the day at the Airbnb staring at the screens, and again, the position was closed. The weekend goes swimmingly. Everybody has a wonderful time, and the trader flies back to California. On Monday morning, as you know, the larger break occurred. Doing the math on the positions that were there, which was 40 contracts NQ short, 20 contracts ES short, 2,000 QQQ, puts on IWM about 10 or 15, and some calls on the UVXY, the trader realizes that he left over $1.2 million on the table by closing the position just one day early. So doing that and knowing that, he does what anybody would do in that particular situation. He whips out his phone and sends a Venmo request for $300,000 each to all of the 4 friends. He has yet to hear from any of them. The moral of the story is this. There's actually 2 main takeaways from this story. One is simply that if you're going to follow somebody who does a weekly show on the internet, don't ever do as they say, do as they do. And secondly, never, and I mean never, ever go on vacation. As discussed in the intro, so much going on in the charts this week with the yen carry trade unwinding, taking the markets a lot lower, and then over the last few sessions, large rebound back, which is putting us in a very, very interesting situation, which I believe could actually lead to a little bit more gains next week. Let's take a look at the charts together. I'm going to bring you over here to the S&P daily and talk about all these different technical nuances that are going on. So firstly, obviously, daily chart, all-time high here, and we start to come off, and this is the weekend question here. Now, some very, very interesting things happened as we've come up off that low recently. Most noteworthy is that you see the 8 EMA coming down. This is the 8 exponential that I talk about all the time. Over the last 3 sessions in the market. I'm speaking to you on Friday, August 9th. So from Wednesday, Thursday, and then today, I want you to notice that the rally up into it has actually touched that 8 EMA twice now in 3 sessions, and Friday's session actually moved up above it, as I was expecting. In the weekly options advisory in my room this morning, we actually had an S&P long coming into the day, and we put on another S&P long for Tuesday's expiry today, just because of the action that we saw. Generally, when a market is down, and it's down big, and it's going to bounce back to a very obvious technical area which lots of people can see, right? We call those mechanical references, right? Such as a declining 8 EMA. It should reject immediately. And on the big body candle here on Wednesday, you saw the rejection immediately, and it took the market notably lower. But here's where things get interesting. I believe that if the market was going to retest the lows, why didn't it do it right away, right? Instead, we got this action here where on Thursday we went a little bit lower into the range. We opened on a gap down, correct? Or we opened on a gap up, excuse me, and then we rallied, and again, we touched that 8 EMA for the second time in as many days, and then we took ourselves a little bit higher on Friday. So my thought process here is coming into next week, barring anything crazy systemic happening, we should probably float higher. And I think we're going to float higher into this area here, which is just underneath 5,400. And I say that specifically because look at the bottom of the consolidation. This is the bottom of the consolidation that I was talking about in the previous segment, about breaking down through the bottom of that consolidation, setting up a larger short. We've now retraced almost all of that, and I think the potential is there that the market's going to get pulled to the bottom of that value area right up in that 5,400 level, which is not only a very key psychological level because it's that round number, but if you calculate the Fibonacci retracement from the all-time high down here to this low, guess what? That halfway point is exactly right in here at 53.9402. It's actually right there. So this is where I expect the markets are probably going to get pulled to, looking for that move to 5,400-ish in next week. I want to continue this TA just with the NDX daily. I'm going to show you something just slightly different on this chart. Obviously, the pattern is roughly the same, meaning that you've come down, you've got the low end of that consolidation here, and again, that 8 EMA that was tracing prices down, again, 2 touches in those last 2 days, Wednesday and Thursday, and then pushing a little bit higher. So obviously, if the S&P is higher, we expect NASDAQ 100 to also float up to that level of the bottom of the consolidation. But I'm going to use this particular chart to illustrate another technical point that I haven't gotten into yet, and that's simply the wedge pattern, right? There's an enormous wedge forming here in terms of this triangle that is tightening, and as this has been happening, volatility has actually been coming down a little bit. So I think it's going to be very interesting to see what happens, which way this wedge pattern breaks, right? I mean, we're going to probably work our way here somewhere into the corner, and then the market's going to have to make a decision. Is it going to actually squeeze to the upside, or is it going to squeeze to the downside? So that's coming relatively soon. So just keep that in mind, that as those lines start to tighten, generally what happens in the market is a little bit more indecision starts to occur, and you're going to see some choppy action, especially if we get up to that low end of that consolidation, because then the market has a big decision to make. Is it going to find some acceptance back up in that balance area, or is it going to reject that balance area and move hard to the downside? Last but not least, before we get off these charts, I want to leave you with one here, which is a daily of the VIX, CBOE Volatility Index. As that market came off so hard on that yen carry trade unwinding, look at the peak in the VIX. Like, we marked like a 60-something handle up here in the mid-60s. Obviously, volatility is a mean reversion type of instrument, so it's always going to do this. Huge expansion, huge contraction. But what I want you to pay attention to is where it is now, because look at where vol was here. All the time that the market was much calmer and moving to the upside, vol had a very difficult time moving above the 20 handle, right? Mostly volatility on the S&P was sitting around 16, 17, right? And now look where we've come down to. On the move here on Friday, volatility has collapsed to 20. We're now at 20.37. So I'm telling you this in advance for next week. Watch this and see if we start to dribble lower and come into those teens. I think that more confirms that the market wants to move up to that 5,400 level, and whatever fear was in the market recently is definitely starting to dissipate out, and things are normalizing a bit. Time now for another sector spotlight, and in the spirit of looking ahead and seeing what factors are going to either confirm or deny a potential move up next week, I thought that the sector we would go with is XLK because it is the technology sector, which as we know is well over 30% of the entire S&P. So I like to say, as tech goes, the market goes. Let's move over here and take a look at a chart. We're looking at the daily of the XLK here. And obviously it's looking similar to that S&P chart, but I just want to revisit it with everybody because I do feel it is so important. It's just another data point I think that is going to confirm if this market is going to move higher. Think of it this way, it is going to be very hard for sellers to catch traction in the broad market if they do not have confirmation of selling in the XLK. So just keep that in mind. So again, you've got the same flat top there, but note how close it is here in tech as opposed to the S&P. Do you remember in the charts I was showing you prior of the S&P and the NASDAQ, that gap here of where we were in relation to Friday's close or Friday's high and the low end of that consolidation was actually bigger, right? So this is actually interesting to me that I think the tech actually has more of a chance of moving up. And again, I think it's going to pull the S&P higher. So you want to be kind of looking at where your downtrend line is in tech. You also have a moving average here, right? You're going to be moving up to potentially that 21, but watch that 208.30 level in the XLK closely next week. You may want to put this on a market minder window and put an alert there. If you see like 208.40, 208.50, you start ticking above that level. That means that technology, even if the broad market is not doing it itself, technology has moved up into the consolidation balance area and has potential to find acceptance there and maybe move higher up to that 21, which also would be the downtrend in the market. And that's another reason why I'm talking about this, because there is potential that if the market is up next week and you have XLK moving up through into the low of the consolidation area and into the trend line, understand that it may break its downtrend way ahead of the market. And that would be very bullish because it will lead it. So watch for that. If it's a hard up next week and you can break that downtrend line right in here above approximately the 210 handle or whatever in the XLK, again, it'll probably break trend ahead of the S&P and that'll be bullish. As always, it wouldn't be a true weekend edition if I don't leave you with at least one good idea for next week. And this week's idea is Amazon. They are consumer discretionary. They are consumer staples. They're basically consumer everything, but with their huge presence in the cloud, they are definitely tech. So let's check over the chart over here. I want to show you some interesting things going on. They had a very, very large gap down is the first thing you should notice on a recent earnings call, right? Those earnings actually yanked the stock all the way down to here, went a bit lower, and has since been recovering. When I see this particular pattern, it always makes me take notice because gaps generally fill, especially on quality names like Amazon. So what's happening here is that we are now bumping up against that 8 EMA on the daily. Friday actually did exactly what it should, meaning the stock rallied up to the 8 and backed off. And that actually is great because it gives us a very, very clear signal as to when to act long on the stock, basically if that 8 EMA gets retaken. And look at how much empty space there is here, all the way up to about 183-ish or so, to the low of that day just before the earnings. That's your window, basically. That's what you want to be looking for long. You want to be targeting different areas up in there if you get that move up above the 8. And I also like the way this is kind of a wedge pattern here that's sort of building up pressure. Notice all the higher lows that keep coming in. That tends to build up pressure. So we may see a movement up into there. Now let's take a quick look at options here to see how we would particularly play this. But again, only if we get the signal of moving up into the gap above the 8, which would be Friday's high. So looking at the options chain of Amazon, about 33% implied vol, which is decent but not great. But one thing I noticed just from simply eyeballing the chain here, right? And you should be able to do this as well. You don't need to really look at the specific level of implied volatility or whatever. You just kind of want to see are the puts and calls that are slightly out of the money from where you are they rich enough for you to do a complex spread? Meaning, does it make sense to do a butterfly or not? Because butterfly really only makes sense if you're getting some really good value for that mid strike, which is essentially just taking the cost of that lower strike on the call side, right? Or upper strike if it's puts, taking that cost down by a lot. If you can't do that, then it doesn't really make a lot of sense to do a butterfly. And so in looking at this particular chain, I would say that the butterfly doesn't make a lot of sense. I'm looking at the premiums here, starting with at the money here, about $2.50, but look at how they dissipate very, very quickly, even once you just get to about 180 or 182.50. So to me, I'd probably be looking more for a vertical here instead of something more complex. I've got a 170, 175 spread up on the screen here. That's not bad, 5 wide at a cost of $1. I like the 5-to-1 risk reward, and on any pullback, or if we get the breakout regardless, I'd probably be looking at 160 puts short, because if you remember on that chart, as it was moving up into that wedge, you had some pullback lows there, just about 160. So if I could, I'd see how much premium I could get for those 160s. Right now it's about 72 cents. Obviously that's going to change going to next week, but I'd like to sell something down there as well to finance the trade and get some premium into my pocket so that I can pay for that call spread as you move up into that potential gap fill. And that's all for our show this week. I hope you enjoyed it. Thank you so much for spending just a little bit of time with me. Remember, if you can, hit that like and subscribe button and also the little bell icon so that you get notified whenever ShadowTrader posts new content. As I was discussing in the video, charts are in a very interesting area here with that wedge formation sort of building. Volatility seems to be dropping. Fear seems to be coming out of the market. And at the same time, we just bumped up against that 8-period exponential moving average twice in 3 days, actually 3 times really, because we broke through a little bit since Wednesday, Thursday, and Friday of this week. So to me, it looks like there is some potential to float a bit higher. Remember, you've got those 50% fib areas just above us there at the low end of that consolidation. It feels to me like the market, at the very least, wants to get pulled to there, and then we just reassess the situation, all right? Before I sign off, I just want to tell you there will be no show next week, and we will reconvene the week after. Just remember, next week I will not be doing the weekend edition. Coming at you from beautiful Los Angeles, California. As always, I wish you good trading, good night. I'll see you soon.